AT&T is a telecommunications company based in the United States, with a history dating back over a century, providing a wide range of services to customers around the world. Two of their most popular services are their wireless and internet. AT&T Wireless is a leading mobile phone service provider in the United States, offering a variety of data plans and devices to suit the needs of individuals, families, and businesses. With a network and reliable coverage across the country, AT&T Wireless is a popular choice for those in need of mobile phone services. AT&T Internet is another key service offered by the company, providing high-speed internet to customers in homes and businesses. With a variety of plans and speeds available, their internet is a popular choice for those in need of fast and reliable internet access. Both services are supported by AT&T's extensive infrastructure and capabilities, making them some of the most popular and well-regarded offerings in the telecommunications industry. AT&T's latest earnings report highlighted the decline of traditional telephone usage and the company's focus on wireless and broadband internet services. The report showed that the company took a $24 billion charge related to its landline business and a $1.4 billion asset abandonment charge tied to wireline conduits that were no longer needed to support its copper and fiber networks. AT&T has been narrowing its focus by shutting off its entertainment unit into Warner Bros. The company plans to spend about $24 billion in capital expenditures this year and launch a new joint venture with BlackRock to expand its fiber network. While wireless remains AT&T's biggest revenue generator, the company is also investing in its fiber business for future growth. The report showed that AT&T added over 600,000 new phone subscribers in fourth quarter and reduced its customers' churn rate. However, the report also highlighted the competitive pressures in the industry as T-Mobile outperformed AT&T in net additions and launched a price war by cutting prices to lure new customers. AT&T has taken several steps to reduce its debt. One of the ways they plan to do this is by focusing on its core business of providing wireless and broadband internet services and selling non-core assets. AT&T has set a goal of lowering its net debt to adjusted ratio to below 2.5 by the end of 2023. To do this, the company plans to continue growing its core business, cutting costs and increasing cash flow. If necessary, they will also sell more assets or take other actions to lower its debt. They did cut its dividend in 2020 as a part of the strategy to reduce its debt load, which had ballooned in the recent years due to its acquisition of Time Warner and other investments. The company has a long history of paying a high dividend yield to shareholders, but it also had a large amount of debt that needed to be serviced. By reducing its dividend, AT&T aimed to free up cash flow that could be used to pay down debt and invest in growth opportunities, such as expanding its 5G network and building out its fiber infrastructure. Cutting the dividend was a difficult decision for AT&T, but it has seen as a necessary step to strengthen the company's financial position and create value for shareholders over the long term. Recently, AT&T's stock price has increased, and some possible factors that may have caused the increase include the company's efforts to reduce its debt and focus on growth, which may have positively impacted investors. Also, the recent fourth quarter earnings report showed strong performance in its wireless segment. Here's a brief overview of some important key ratios when comparing AT&T to competitors. These ratios can indicate a strong and healthy business. However, this is a small number of ratios and more research should be taken. Verizon has a higher current ratio than AT&T, which means it is better positioned to meet its short-term obligations. AT&T has a lower debt-to-equity ratio than Verizon, indicating a more conservative approach to financing. Verizon has a higher ROE than AT&T, indicating that it is generating more profit for its shareholders. Verizon has a higher gross profit margin, indicating that it is more efficient at generating profits from its revenue. Verizon has a lower PE ratio than AT&T and may be undervalued relative to its earnings. Overall, these ratios suggest that Verizon may be in a stronger financial position than AT&T with higher liquidity, profitability, and market valuation. I ran an ROE model to determine the intrinsic value of AT&T, and at the time of this recording, I found that the true value is currently around $15. Keep in mind that these models are only an estimate for investors because they rely on various assumptions and estimates that may not always be correct or accurate, but can provide an estimate of the fair value of an asset to help investors avoid overpaying for the stock. In my own opinion, AT&T has taken several steps to reduce its debt and improve its financial position. This has included selling non-core assets, cutting costs, and focusing on its core business lines. For investors considering investing in AT&T, it is important to keep a close eye on the company's financial performance and debt reduction efforts. While the company has made progress in reducing its debt, it still has a long way to go before it can be considered a strong investment opportunity. Thanks for watching.